Welcome to Pennsylvania Newsmakers. I'm Luke Bernstein, and we have a great show today. We are talking all about home ownership, but first, we're going to talk about the state budget and everything that you need to know when we come back.
Welcome to the fast-paced and unrehearsed weekly discussion featuring the leaders who help shape your world. Join us as we address the issues that impact you each and every day. This is Pennsylvania Newsmakers. And now, here's your host.
Welcome back to Pennsylvania Newsmakers, and I'm here with our first guest, Alex Halper of the Pennsylvania Chamber. Alex, we are grateful you are with us today, and we have an expert here to talk about the Pennsylvania budget. Thank you for being on the show.
Thank you for having me, Luke.
Now, a lot of things are happening. We are in the middle of June with a June 30th budget deadline approaching us. What are the latest things you're hearing about the budget? Where do things currently stand as we move into these next few pivotal weeks?
Yeah, June is a wonderfully chaotic month oftentimes in Pennsylvania state government with our legislature as we approach the June 30th deadline for lawmakers and the administration to pass a budget plan for the next fiscal year, which starts July 1st. The process kicks off in February with Governor Shapiro outlining a budget plan. He called for a pretty significant increase in spending, in state spending, to the tune of over $51 billion, about a 7.5% increase over the current fiscal year. There are different ideas, though, on what spending in Pennsylvania should look like, what different policy priorities should be advanced. It sounds like the House and the Senate, the administration, are still kind of positioning for what their priorities are, what that final plan should look like, and the hope, of course, is that some clarity comes together in the coming weeks.
So obviously you represent the private sector part of the Pennsylvania economy, all the employers throughout Pennsylvania. What are the priorities from a business community standpoint as you look at this year's budget?
Yeah, the key is competitiveness. In Pennsylvania, we have so many qualities, so many advantages from our energy resources, our geographic location, our institutions of higher education. What employers are looking for is public policy that complements those advantages, having a tax code that is competitive with other states. Things like regulations and permitting that encourages growth, that invites investment. State budgets and the policies that surround it are opportunities to make Pennsylvania more competitive, and it's certainly our hope that lawmakers embrace the opportunity.
So, and spending's a big part of that. Some of the tax provisions, is Pennsylvania competitive now, or what can Pennsylvania do to be more competitive in the future?
Yeah, we're making progress. For many years, Pennsylvania, unfortunately, really lagged the rest of the country, other states, in competitiveness as it relates to how much we tax businesses. We had the second highest corporate tax rate in the country for many years. A few years ago, the legislature, working with then Governor Wolf, passed legislation to gradually reduce that corporate rate over the next 8 years. So we are in the early phase of that scheduled reduction in the tax rate. So Pennsylvania is becoming more competitive. We're really not quite there yet, and it's going to be important, we believe, for lawmakers to stay focused on that priority, ensure that these tax rates and different tax policies continue to improve so that we can be attractive for investment.
In terms of competitiveness, there was a huge announcement this week in Pennsylvania where Governor Shapiro joined with Republicans and Democrats to come together and announce a $20 billion investment from Amazon to create 2 data centers here in Pennsylvania. What's your take on this, and how do those policies impact a decision like that?
Yeah, it was a remarkable announcement. It's been a great week in Pennsylvania, looking at significant investments and projects in northeastern PA and Bucks County outside of Philadelphia. I think an important factor that investors are considering are, our energy resources. I mean, Pennsylvania has this very unique opportunity to provide energy for energy-intensive projects like data centers. And the hope, of course, is that we can build on this momentum. But again, we need the policies in place and the business climate that makes that attractive.
So with Amazon, big announcement, exciting. Why do you think they chose Pennsylvania?
I think it comes back to our energy resources has to be at the top of that list. If we have the ability to power these types of projects, it should put Pennsylvania into a different category. That combined with bipartisan support for investment, key leaders, Governor Shapiro, Senator McCormick, were both there. It sends a good signal that Pennsylvania is open for business.
Well, we're going to hear more from Alex Halper, one of Central Pennsylvania Business Journal's most important people in lobbying in Harrisburg and government affairs, when we come back next on Pennsylvania Newsmakers.
This broadcast of Pennsylvania Newsmakers is presented by the Pennsylvania Chamber of Business and Industry, the statewide voice of business, and by the Pennsylvania State Education Association, bringing the power of a great education to our schools, our students, and our communities. This broadcast of Pennsylvania Newsmakers is brought to you by the Pennsylvania Highway Information Association, the go-to source to learn about transportation projects and issues. Please visit pahighwayinfo.org. And by the Pennsylvania Manufacturers Association. Business in Pennsylvania is our business.
Welcome back to Pennsylvania Newsmakers, and we continue our discussion with Alex Halper of the Pennsylvania Chamber, talking about how we can make Pennsylvania more competitive. And we were just talking about the announcement from Amazon, a $20 billion announcement in terms of investment into Pennsylvania. But what does that really mean in terms of how it contributes to the tax base of the local economies, to the local communities? What does that really mean when you put it in perspective?
Projects of this scale can be game changers for a community. Of course, you're talking thousands of jobs in just the construction phase of a project of that scale, but then many really good family-sustaining jobs going forward. Projects also have ripple-down effects of the entire kind of ecosystem and infrastructure that is built around an entity, a project of that size to support it. Critically important. Oftentimes, projects like this might end up being the largest property taxpayer in a region or in a county. So significant benefits for the community and for the residents.
So huge win for Pennsylvania, but we're looking at Ohio, and you look at North Carolina, and they're also getting big wins. How can Pennsylvania continue to compete and beat states like that for future projects? Yeah,
there is no reason whenever a major project is being considered that Pennsylvania is not one of the final states considered and the state that's picked. We have every advantage going for us.
So what's the pitch? As CEOs, companies reach out and they say, why Pennsylvania? What do you say to that?
We have, between our geographic location, our business, our business climate is improving. Our tax policies are improving. We have lawmakers and administration that, I think for the first time in a while, have focused on government moving at the speed of business. We've struggled for many years with things like permits, taking forever to get permits issued for projects. That's an area where we've made progress. We need to continue to improve it. But if we can demonstrate to CEOs that their investments are going to allow projects to proceed efficiently, I think Pennsylvania's got to be an attractive place.
So more work to do, and we're at a really critical time to do it. As we started talking about the budget, coming full circle back to the budget, we saw this big project. No, we have great attributes. No, we have more work to do. What do you think, as we face these final few weeks, what should the top priority areas be for lawmakers to focus on to make this state more competitive?
Yeah, I think Pennsylvania is operating under divided government, a Republican majority Senate, a Democratic majority House.
And they're narrow, right?
And very narrow. The Democrat majority in the House is a one-seat majority. In the Senate, 27 to 23 Republican majority. It requires bipartisan cooperation. I think developing a bipartisan plan that emphasizes competitiveness is an important signal. We have to maintain the progress that is being made on our tax code, whether it's gradually reducing that extremely high corporate tax rate, other provisions, things like net operating losses that help startups when they lose money. We trailed the rest of the country, making progress on that front as well. A number of small business tax reforms. We need lawmakers focusing on competitiveness, and I think that will have the kind of impact we need it to have.
So you heard it here from Alex Halper about how Pennsylvania can be more competitive, where things in the budget stand. We want to thank Alex, but you don't go anywhere. We are going to come back and talk about home ownership next. What is going on in the market? Are you a homeowner? What are the obstacles? Things have been absolutely wild out there with a few experts. So come on back, Pennsylvania Newsmakers.
This broadcast of Pennsylvania Newsmakers is brought to you by Cross-State Credit Union Association. Credit unions, where people are worth more than money. To find a credit union that is right for you, go to ibelong.org. And by the Energy Association of Pennsylvania, Pennsylvania's energy information source. This broadcast of Pennsylvania Newsmakers is brought to you by the Association of Pennsylvania State College and University Faculties, representing the faculty and coaches who are devoted to providing quality public higher education for Pennsylvania's college students.
We continue with this week's Pennsylvania Newsmakers, and we have two wonderful guests with us for this segment. We are joined by Senior Vice President for the Cross-State Credit Union Association, Christine Mihalik, and CEO of Penn East Federal Credit Union, Marie Begin. Christine, Megan, we are so happy to have you both here. Christina, I've known you a long time, and I'm excited to talk to you about a couple things. Home ownership. We're seeing a lot in the market right now. We're seeing various rates, the post-COVID climate, all this environment. What are the latest trends telling us? Because we're seeing home ownership rate drop for the first time, and it's at its lowest level in nearly 5 years from COVID started. So what are the latest trends telling us? What are those factors leading us to getting us to this current market climate?
Sure. Thank you, Luke. Thanks for having us. It's interesting to see what we're noticing in the home ownership rates today. We're kind of at a pause, which is surprising, but looking at the factors, it really isn't that surprising. We're noticing higher mortgage rates, rising in home prices, and a tight housing supply. There's fewer affordable entry-level homes, especially for first-time home buyers, which can raise prices and reduce opportunities for those home buyers. And also a brief spike during COVID due to reduced spending was short-lived. So I think the biggest takeaway is the mechanics of home ownership hasn't changed. It's just some of the factors that have surrounded in this space. But working with a financial institution and your realtors, like a credit union, can really get you more ingrained to achieve that dream.
So, Marie, Penn East Federal Credit Union, Northeastern Pennsylvania. When we think about what Christina just said, we have higher rates than we've had in recent years. We have lower supply out there for some of the housing. We have significant demand for those houses that are available, and we have affordability challenges. So how is this impacting specifically Pennsylvania and maybe your region?
It does impact our region. It's impacting the whole state. The issue here becomes a matter of somewhat of a financial literacy and understanding the process. As Christina said, the mechanics of the process of buying a home have not changed for many years, but it's probably somewhat daunting and overwhelming for the folks that are currently looking to be a first-time home buyer. The credit unions, what we do is we try to educate folks so that they're ready to buy a home. Every year we sponsor a first-time home buyer seminar at Penn East. We just had it a few weeks ago. And we bring together all the components, realtors, home inspection agencies, some of the nonprofits in the state of Pennsylvania that help you get some money for down payment, people that could counsel you on credit scores. Those are the things that this process has not changed, but that seems a little daunting and overwhelming, so people may want to pause and think, oh, I don't know. But we try to educate everyone, buy a home that's affordable within your means. Try to work on your credit score, keep it high, keep it as high as you can, things like that. So to help overcome some of the challenges or some of the obstacles people feel they may face in purchasing a home.
So to that point, some of the things that we're going to talk about in the next segment, so do not go anywhere, because we're going to come back and talk about tips for how people can be first-time home buyers and what they do to get through those barriers. It seems like there are a lot of barriers right now to overcome, and we want to talk about the tools to overcome that barriers. Christina, what are some of these barriers? And we've mentioned several of them, but what do you see as these barriers to home ownership right now?
I would say just the understanding of how to get involved. I think buying a home can be exciting, but also intimidating. But when you work with a local financial institution like a credit union, particularly getting in the space of understanding what interest rates are, the types of fees that come with mortgages, your pre-approval, down payments and closing cost. I think those are some of the barriers of not understanding, doing your homework, more education, as Maria has been sharing what she does at Penn East Credit Union. But I think, by partnering with your local financial institution, they will really pave that way for those new homeowners.
Well, Christina just did a great job of walking through the barriers. Marie talked about some of the financial tools, but we're going to talk about how we overcome those barriers when we come back next on Pennsylvania Newsmakers.
This broadcast of Pennsylvania Newsmakers is brought to you by the Pennsylvania Medical Society. Inspired physicians committed to the good health of Pennsylvanians and the advancement of the practice of medicine. This broadcast of Pennsylvania Newsmakers is brought to you by Pennsylvania American Water. We keep life flowing across the Keystone State.
Welcome back to Pennsylvania Newsmakers. We're talking home ownership, recent trends, and how to overcome barriers in the housing market for buyers. We're here with Christina with the Cross State Credit Union Association, and we're here with Marie at Penn East Federal Credit Union, talking about these challenges, working through them. We talked about all the barriers in that first segment. And so, Christina, I'm going to start with you on the financial prep side of this, because Marie talked about how having a seminar in advance, she started to identify some of the things that home buyers, future home buyers, should know. You then talked about the barriers, so how we overcome those barriers. From credit scores to debt to income ratios and down payments, what should first-time home buyers think about so they can put themselves in the best possible position to actually purchase a home?
Sure. I think the biggest thing for new homeowners is really checking and improving your credit. Aim for a FICO score of 620 plus to qualify a mortgage. And for those that aren't familiar with a FICO score, it's really a specific score used by lenders to assess a consumer's credit worthiness. So the higher the score really generates into a better interest rate on your mortgage. You can also get a free credit report at annualcreditreport.com, review them for errors. And really, at this moment, when you do look into your credit score, this is a time where you pay down your debts, make one-time payments, and avoid new credit lines to really improve that credit score.
So walk me through that a little bit, Christina and Marie. If I am, let's say I'm 20 years old, and I'm really trying to establish credit for the first time, and I wish I was 20 years old. Maybe not trying to establish credit all over again, but I wish I was 20, so I'm out there, I'm trying to determine how I can really get a good credit score. What are the things that I do?
So one of the things that's interesting and unique in the credit union space specifically at Penn East, and I know some of my partner credit unions and colleagues have the same type of product. But we have a credit builder loan, and it's a loan that we give to someone who has no credit. The loan is secured by the money that we gave them. It's usually a small loan, small amount. The money goes into a savings account. The loan gets secured by that savings account, and they pay the loan back in a timely manner, and that helps build their credit.
Small amount, 500, 1,000.
Anywhere from 500 to 2,500,
Okay.
depending on their income, their debt to income, and what ratios that are tolerable.
So explain to people what debt to income ratio is.
So their debt to income ratio is a percentage of their monthly debts compared to the percentage of their monthly income. This is a ratio that is monitored by financial institutions. It's one of the metrics they use to approve a mortgage or any other loan, and it's unique to each financial institution. Everybody has a different level so whoever you're dealing with, make sure you know what their debt to income ratio is that they would be looking for to measure you on. And basically, it is a factor of showing you that you're living within your means.
So as we think about that credit score, understanding not taking on a lot of debt, which can be difficult if you have school loans, if you're just starting out. So as we look at that credit score, you talked about one key component, which was actually getting a line of credit in a form of a loan. What else can you do to try and build up that credit at a young age, or trying to repair your credit if maybe you made a mistake when you were younger?
At Penn East, we have some of our staff are certified financial advisors, financial counselors. It's good to stop in if you have no credit or very little credit, or if you've made a mistake, as you just mentioned. It's good to talk to somebody about, so how do I fix that? The main fix for all credit scores is to pay your debts on a timely manner. Even if you've made a mistake, go back to paying them on a timely manner. That will help build your credit score. It will help increase the credit score at a more rapid pace, which would then set you up for future loans.
So one of the key things, one of my key takeaways is almost know before you go. Exactly. Try and get more information early and learn about the process. And I think this is a great segue to talk about the current generation. The younger generation right now, we're seeing, Christina, less home ownership rates in this current younger generation than in previous generations. Why is that, and what can financial institutions do to help encourage home ownership with this younger generation?
I think, again, going back to that credit score, being mindful of, the higher the score, the more opportunity, and also that debt to income ratio, the lower the score, the stronger borrowing profile, and working with your financial institution like a credit union can get you those tools and resources to get you on the path of home ownership. I also think the biggest thing that we seem to overlook, even in my day-to-day, is really saving for that down payment and closing costs. Usually first-time home buyers put down 7 to 8%, but we really aim for 20% or more to avoid that private mortgage insurance, which is not protecting the borrower, but protecting the lender. And then in addition, you also need to be mindful of the closing cost of 2 to 5% of the price.
Well, thank you very much to you both. We've had two great guests today, and we've had a great segment talking about the budget and the state level and your home budget. With that, I'm Luke for Pennsylvania Newsmakers, and we will see you next week.